You're watching the Daily Market Comment by Ref Boyajian. I'm Cristina Marujos, and thank you for joining us at XM.com. Equities were on a steadier footing on Tuesday as the sell-off on Wall Street appeared to be cooling off. The tech-dominated Nasdaq composite briefly flirted with correction territory on Monday before making a powerful comeback to close up 0.05%. The Dow Jones and S&P 500 weren't as lucky, however, with the latter unable to completely erase its losses and closing lower for the fifth straight day. This is likely taking the shine of the rebound as Asian markets seem unimpressed. However, European shares opened with solid gains, recouping a good chunk of yesterday's losses. The uptick in government bond yields gathered additional steam at the start of 2022, as investors grew increasingly doubtful that inflationary pressures will abate quickly. The explosion of COVID cases globally due to the highly contagious Omicron variant is keeping supply chains strained, even though many countries have opted against new restrictive measures. Yet swathes of people are being forced to self-isolate, disrupting businesses in all sectors of the economy, and China is not letting up on its zero-COVID policy. With the supply constraints likely to keep inflationary pressures simmering for several more months at the very least, investors are nervous about how much higher yields will go. On Wall Street, a Fed liftoff in March is looking more certain by the day, so the bigger concern right now is what the terminal rate will be. Money markets have fully priced in 3 rate hikes for this year, and the odds for a fourth one are rising. Tomorrow's CPI readings out of the United States should give some clues as to whether Fed policymakers should be getting more worried about soaring prices. In the meantime, markets will be looking to Fed Chair Jerome Powell for an update on his views on inflation during his confirmation hearing in Congress later today. In the currency markets, the U.S. dollar was weaker against a basket of currencies as the 10-year Treasury yield pulled back slightly and as risk appetite improved on the back of the rebound in tech stocks. The risk-sensitive commodity dollars were all firmer against the greenback, and the pound edged higher too, hitting a fresh 2-month high. The euro crept up to around $1.1340, but the yen slipped against all its major rivals. Thank you for watching today's Daily Market Comment here at XM.com.